morning, everyone, and welcome back. Today, I'm joined with Francis Hunt, also known as the Market Sniper. He's a seasoned trader, educator, and macro thinker who understands the global markets from every angle, in my opinion, both technical and fundamental. He's helped thousands of people, including myself, decode the complex economic signals to turn that into certain strategies. So please make sure to check him out. Links are in the description below. Francis, it's always a pleasure to have you here.
Thanks for having me back, Versan. Delighted to be with you.
Yes, my pleasure. And, with everything going on in the world, from the monetary shifts to all the geopolitical tensions, I think now more than ever, we need to be paying attention with a clear mind because there is a lot going on and the overload of information is real. So it's very easy to get lost if you're not grounded. But I love having you on because you bring all the clarity that our listeners are looking for because there's too much noise out there. Maybe we could start with the bond market. We do see a lot of growing pressure on the US Treasury, and Japan is in the headlines again. Also, our United States debt just got downgraded once again. So it's a clear signal that the dollar is losing its hegemony status. So overall on the bond market, what's your take?
Well, debt-based collapse. And the nations that are leading it, the thing that happened is post the CV19 events, the biggest proliferator was America. So American, and our primary call of September was literally the subsequent turn, our first setup that said this is going to be a downside break for the first time in a long time. And everyone was buy bonds, wear diamonds, buy bonds, wear diamonds, everybody big on that. And of course, the pivots, the rates are going to go even lower. Everybody remember all these narratives, pivots, buy bonds, wear diamonds, all of that. Into the face of that, we said that's the end of a 40-year bull market in bonds. That was a financing mechanism for essentially a fiat proliferation game of maximum liquidity. And for every USD, there's a UST. You almost have to marry them up. So fiat to get borrowed into existence creates a debt instrument. You buy a home and you get a mortgage from a bank. They don't take somebody's savings. They've actually created new money. They've created an asset that says you owe them that money back plus an usury extraction. And as a result, you have to find more money than what you borrowed to return to the bank, but you do so in chunks over a time period. And that's money being borrowed into existence, and that creates an asset category for the bank. Their mortgage over you is an asset, and they hold your home as collateral. So really simple stuff. Many people get this already, but where they tend to get lost is, I get a lot in comments, yeah, but when things go down, this time they'll do like they always do, printer go brr, they say something like that. And what they don't seem to understand is that works to a point. So because they've learned from 1987, the older ones, 1999, the not so old ones, 2008, most of us were around for that and saw it. They saw QE1, 2, and 3. They didn't do enough. They had to keep coming back and doing more, and they didn't give enough to the end user. They kept bailing banks, so there was no consumer recovery for a long, long time. So they pivoted for the CV19 event to get a more V-shaped recovery. I say inverted commas recovery, but then they did a much bigger proliferate. Many people don't know that there was a 21 to 23 trillion loans that went out to banks. So actually the 7 trillion that was the package, of which many went to quangos that politicians control, that were driving certain agendas as well during the Biden regime. I think only really between 1 and 1.5 trillion actually went to people in the end users, businesses and consumers. But there was stimulus this time, as well as the great bailout of banks. But that was such a huge proliferate that it broke the bond market. And they got away with it because they created so much fear. Equities collapsed, Bitcoin collapsed, everything that was risk on collapsed. And all that money got directed into the natural fear investment instrument, which is the bond market. And that's what gave us our blow off high in the valuation of bonds and that super low rate, where you went right down on the US 10-year to about 0.33. That's how trends end. A melt up or a final capitulation, depending on whether you're looking at the yield in the final capitulation or the blow off. So that was the most important call that most people are only just starting to realize now. We saw Druckenmiller and Tudor Jones come out November, because it's been a while since we last spoke. So first time we were in better company. But when we were saying 20, 21, 22, the TLT we shorted in 2020 all the way down. We bought puts all the way down. We trade what we do, and it kept going down. And it kept going down until you effectively had a 50% loss at the worst point on the TLT. And here's how devaluation happens that many people don't understand. And here's the key points I really want to get people to understand, your viewers. And thanks for having me on to get this message across.
Of course.
When you devalue, when you're in the situation, what you need to do is devalue debt. That's essentially what Volcker did after the Vietnam War, when an unbelievable amount of munitions were expended on blowing up the jungle and poisoning people, Agent Orange, chemical warfare, napalm, all these Geneva Convention busts that were proliferated. But nonetheless, much more than all of World War II in terms of munitions. But because it wasn't Europe, we didn't know, we didn't see it. It wasn't visual. A little bit of patchy news someplace far away in Asia, but it was actually huge. And the French asked for their gold instead of the paper. The convertibility was the dollar was convertible, and we all pegged to the dollar. But then we said, they're cheating. They're cheating. They're printing more dollars. They're buying all of this to napalm a jungle in the name of some productive endeavor that we still don't understand. And in the end, they don't have the amount of, they haven't added gold, but they've added fiat. So the convertibility is in question, and the French asked. So that brings us to 1971. So that's the great game. And what happens is the debt devalues, and then afterwards the fiat devalues. So we had until recently quite a strong dollar, and we had the debt collapse. Now you've had a weak dollar for an extended period, and you've gone down from 110 on the Dixie right down to sub 100. But it's also important to say that Dixie's not the best measure, because you're comparing it with other bad fiats that didn't do as much borrowing as America did during CV19, but did a fair amount, and are also plagued with the same disease, maybe just slightly less acutely in many instances, and some arguably maybe more so. So what tends to happen is you should be comparing it against gold. And that's where we really saw the acceleration between T-bills being done for gold. And that's kind of where we are. So the question many people ask is, well, it's a top, we should get out. So the minute you get into a good trade, people start fear of what they already have gained. So you have fear of missing out, and then you have fear of losing what you have recently gained. And this leads to a tendency to want to call tops. And I'm here to say this is the biggest move you're ever going to be in, and you need to sit tight. So maybe a little sidebar, and I'll let you unpack while I pull this tweet up. But
sure,
if I share, just make sure I'm sharing a screen with you. This was a great tweet.
We got the wrong one. There we go.
Yeah, this one was a great tweet. And I just want to give some people a little bit of scale. Somebody else's work, by the way, IGWT report, in Gold We Trust report. Good tweet, because I like Shadow Stats and John Williams. I think he's earnest about trying to get a real handle on what the true inflation is about. So what are you looking at? The gold line is gold since the 1970s. So that's, sort of getting to the tail end of the Vietnam War that I've just referenced. The blue line is gold divided by the official BLS statistics. And you've only recently, according to that, got higher than the 80s high. Try get that as a horizontal line in there. You've only recently surpassed the $800 in BLS-based stats. And then there's Shadow Stats, which is basically Ronald Reagan's formula of the 80s, unchanged, continued to be applied honestly and universally as it was in the 80s going forward. That's what his move is, and it's the green line. So it's green US CPI adjusted utilizing Shadow Stats. And that's this green line you see here. And actually, the true inflation rate has been so bad that we're really just starting. This is barely starting. And the thinking is, if you look at it on the CPI adjusted stats, to match the 80s, you'd probably need to be in and around $25,500. And then I'm going to say to you, the 80s is small beer to what we've manufactured globally here in a worldwide scenario. In other words, the 80s was Volcker curing America's over-indebtedness by upping rates and killing the value of debt. It's called financial repression, by the way, and it was stagflationary period. And we're going to get the hyper version of that. You need to reduce that. So rates are probably going higher. Everybody asks, I was on a show in Frankfurt, and they say, so when are they going to cut? And I'm saying, he can't really cut. And if he does cut, he might get away with 1 or 2. He's going to take him back and some when the bond market starts throwing down, which is what's happening. The long end of debt knows financial repression is coming. So what happened during financial repression, that was the sort of 68 to 82, nothing era of equities, by the way, did terribly as well, is stagnation. So they devalued the debt by pushing rates ever higher. Quality of living went down. Work, employment, all very low. Growth was very low. Stubbornly high inflation. Quality of people were getting debased, and the debt was getting debased. So everybody had a reduction in standard of living. You were resetting everything downwards. The interest rates went higher. Now, we can't go to the level of Volcker's rates because we're already drowning under the interest payment at a much lower level of rates. So we're going to have some of that debasement, and then we're going to have a stopgap and a collapse. We can't go there. And that's why Doggy came in, all those things. It was all about cutting for a short while, because everybody who started the new game heard that you got 7 trillion in debt to roll, and it's going to come at a much higher percentage than it used to. And that's a major problem. So you needed lower rates, and you're not going to get them because you're in a debt-based collapse. You're in financial repression, which is devaluation of debt markets with a stubbornly higher inflation rate than you're actually paying in return. So despite the fact that the rates are higher and getting higher, you're still below the true inflation. So what that then means is you had the debt debasement, then the currency debasement. It's kind of left foot, right foot in the devaluation chain. They're 2 valves on a geyser that's being hotted up and is going to blow. What ends up happening is it's like beats, they one, then the other, one, then the other. They start getting closer and closer, and then they run together. And you end up getting currency devaluation simultaneous to debt devaluation. And that tends to come when you hit the convexity curve. And I remind you of an interesting story of Ernest Hemingway's. A lot of people are referencing this right now. So I'm going to take us back to that particular chart. It's called a very simple convexity chart that I was hoping I would have close to hand, and I appear not to. Let me just give me a second to find that, because I really want to find that.
Yeah, it's fine. Take your time. Just to add on to what you've been saying, I think there's no doubt we are facing some sort of debt trap. But if we did have such a national debt default, it would certainly collapse the whole financial system. But that's not a viable option, in my opinion. If you listen to the policymakers, like you said, they want to keep kicking the can down the road to borrow more money, print money, inflate the currency to mask the real problem, which is currency devaluation and stripping people of their wealth. But this is where it gets interesting, is what most people don't realize about kicking the can down the road is that the very tax base to support those higher debt levels is collapsing underneath the debt itself. And if you look at, central banks and big institutions, since the reclassification of gold to a tier 1 asset class, central banks worldwide have been buying gold at record levels, even with the high prices right now. So what I think is happening is that they are preparing for some major shift to integrate gold back into the monetary system as a monetary instrument overall.
I think you're right. Yes. And that's going to be very good for gold holders, but will they let us hold on? Are they going to try shake us out, make it illegal, do anything like that? I fear the statists, because actually their goal is not for some of us to survive, and they kind of hate us precious metals people because we've continued to be the guys that have kept their toes to the fire when it comes to the fiat proliferation game that they so love. Sound money people are annoying. We're like the middle classes and the farmers and the aristocrats in the Bolshevik Revolution. They're the people they most want to get rid of. The dangerous thinking people with real ideas and inspiration who've taken active measures to protect their money. They want you a serf in the system. This was that convexity chart and the Ernest Hemingway discussion. You lose credibility on debt very slowly. Initially everyone feels it's comfortable, it's held by the government, they'll always pay you back, they have the biggest military. Then it starts to erode, and then it starts to erode really fast, and it comes down. And I would argue we're somewhere here. There's no turning it around. It's kind of like a big snowball that you started on the mountain, and it's halfway down the mountain. It's just getting bigger and picking up more rocks and ice and everything. It's going to hit the village. You can't just freeze frame and the snowball stops halfway down. It's accelerating. It's gaining size. It's not a stopper. It's not a reversal thing. Your location relative to the village is the only variable you get to change, and you should be hightailing it out of there. So that's kind of where we are. And just to build on that, you mentioned they started out with this whole doggy agenda and talking about how bankrupt America is and Elon this, Elon that. They quickly parked Elon.
Yep.
I think he started to unearth too many of the boondoggles of the Democrats and Republicans, like the arms industry and many other things where they especially like to steal. As I say, the world of arms dealers and politicians is literally a hyena and a carcass as a concept. They're absolute thieves, and they're stealing out the public blind. And that's why military and wars is so popular, because nobody gets to see the contracts, and the arm dealers companies know how everything works. And it's just a complete corruption. Anyway, What tends to happen? He's been sidelined. They came in with this austerity type thing. We've got to cut the waste, cut this. That's all gone. The big beautiful bill is actually spend, cut sometime further down in the future. And actually, as a recommitment to military, he's bragging about 1 trillion on the military. So any notion of austerity or living within your means is quickly culled when you see what he's passing or what people are writing in for him to pass. Because, as I say, these guys don't actually deal with all of that. The long-term runners of the country are the true government. He's just the MC, the puppet show lead character that will die and you'll get a new one, that gets cycled. I don't mean die as in dead, but just, have his tenor and move on. So we're in the skiddy bit, and people aren't going to see the buying power of their money fall as fast as this. They're not prepared for it. Everyone I'm speaking to is, inflation's a thing, goes up once a year. It looks like it's 15% more, 20% more here. No. I'm talking about much higher and faster than that, shorter duration and more, and buy certain item. And then they'll go, oh, well, cocoa's gone up a lot, floods, the bean producers are asking for more money, and they've organized the cartel. And, oh, coffee's gone up because there was a bit of a flood, or there was there. There's weather everywhere. It's going up for fiat devaluation purposes, because the people that are doing it need more money just to have the same quality of living they've always had, just to survive. And when commodities start moving, the least flexible price for input costs to go up is now moving. It's money debasement, and we are in that phase. So people are going to, and you saw this with Japan. Their rice has effectively gone up 100% in a year.
Yeah, sushi is going to be out of reach.
Exactly. It'll be super expensive, and of course you're getting this absolute spill here. When you start having a staple like rice going up twice in a year in Japan, this is the nation of low interest rates. This is the nation of near zero rates. And we in YouTubes were talking about the Nikkei and the long-term debt, pointing out how the rates are going to start climbing on that 2-3 years ago. Now everyone's talking about the Japanese long end. We saw it technically. We brought it, we were putting it in front of people. They were our lowest ranking videos. When everyone was talking about pivots, no one wanted to hear what we were saying about the long end in Japan a year and a half ago, that now everybody's an expert on. But this is where the action is. It's a debt-based failure. So we've kept people's eyes on the fact that we continue to say this. It's a debt-based failure. Please hear me now, debt-based failure. And we brought it to Britain, by the way. And we've said, we did a year and a half ago, we said you're going to see 7.5% on this 20-year GBP. We've done the technical setups with HVF method with the targets. Think of what that does to the housing market. I mean, just think of in the UK, which is so reliant, more than, it's bigger than equities to them. It really, really is. It's kind of like Florida, maybe the housing market is as important, maybe even not. But this is a move, and it's breaking and it's moving. This is the 20-year. If it goes to 7.5, just imagine what a fixed rate, because anybody who takes a variable rate will be crackers, will be. You're looking at quite possibly 10%, because the key thing is banks don't want to lend when they know the cycle's turned. So they push their margins up, they push their safety in terms of underwriting up, they want bigger deposits. So if you go to suddenly wanting a 25% deposit, if you're going to give that rate, and wanting to check how long the person's been in his job, what's the odds of him being retrenched, in a period that AI, robotics, and economic collapse are all around, I mean, can you think of a more shaky transition for giving out money for people to buy an already overvalued asset, to create a debt instrument that no one will buy off you because there's a flood of debt instruments, half of them coming from the government that's competing with you. You as a bank are now going to create more that don't want to lend. In fact, they'd rather have accelerated payments out of the existing mortgage book to reduce their exposure to this asset that must get re-rated down. Housing is mathematics. If everybody's salary doesn't move for 10 years because of stagnation, and that actually means everyone's salary has gone down by a true inflation of 15% over those 10 years, guess what? The House of Property needs to correct twice just for income. And if during that time the interest rates are going to be twice what people think, well, they might have to be as low as 25%, a third of what they currently are now. For people, it's pure mathematics. It's about affordability. And if you then throw in demographics of it, and there's less young people earning less money, less inclined to get given loans, much more uncertain working environment that's got to buy your house, you've got the average age that's gone up from about 31 in many US states to 57 on property. This is nearly pensioners.
I mean, this is all confiscation of assets. They are stripping us of our wealth. And if I may add some flavor to what you've been saying here, if you go back to Trump's Treasury Secretary, Scott Bessent, he openly discussed before he got appointed, and even when he did get appointed, about plans to reintroduce gold into our monetary framework. And I know I keep touching on gold, but I'm trying to think of some sort of how are they going to find their way around the debt that's eventually going to either collapse. Whether they kick the can down the road or whether we do have a debt default, we end up going back to gold. That's just how it is. If the US Treasury right now can take the debt and they could tokenize it and peg it to gold and have a reevaluation, that could essentially create that hybridized system where they can stabilize the currency and maintain the liquidity that is needed to finance the government and emerging economies. And also, for some historical context, President Trump does hold the executive authority that could facilitate such a move, similar to what happened in 1933, where, like you said, they did confiscate gold, but they also reevaluated the gold price under President Roosevelt, which essentially did reset America's monetary system. So this could happen again. What do you think?
I think it's underspoken of, and it's very real risk. This is the interesting thing. Most people, you have the bell curve. Most people live in the fat of the belly. And when you're in extreme times, you should be expecting extreme events. And these are the tail events that are statistically referred to as the tails of normal curve. So they're talking about these that most people, on most times, people would say, don't be ridiculous. That will never happen. Ha, 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 you silly fool. Of course they won't. We're good for it, all of this. We're in those really schizo moments. And the key thing is we've run out of money. America's run out of money. The ability to borrow, printer can't go brr, because at the moment, the Fed is already buying at current prices. Yeah. And you don't tend to print when you're between 4.5 and 5. You first cut rates, then you print. But there's no appetite for the bond market to accept cut rates. They're having to buy at current prices with the rates at 5, 4.5 and 5% on the different debt instruments. So if they have to intervene to hold it up at this valuation, imagine how much they would have to intervene if you cut rates and thereby push the bond valuation up. It's a bit like I'm trying to sell you my secondhand trainers for $100, and you go, Francis, seriously, no thanks. And I go, how about $250? Yeah, but yes, please. You're not going to be going, yes, please. You're going to be going. That's how it is. That's what's going to happen in the bond market. Everyone is sitting there expecting cuts. What you're actually saying is pay more for bonds. Every time you say rate cuts, say the word. I think we should be paying more for bonds. Here's 9 trillion more of them. And I always use my crazy analogy of the pink Crocs that are just every cupboard you open off, there's pairs of rubber shoes falling on your head. How badly do you want another pair of those? Your house, your swimming pool, you don't have water in your pool. You dive into these pink shoes, How badly do you want that fashion item? That was a fashion item maybe, if ever it was. And now there's container ships bringing you 9 trillion more. You'll actually pay them to take it away. So don't dump that on my property. I've got no space. I haven't got room for a pan. And I can't cook without these things all over the place. That's where you are in the debt market. Scarcity is one of the key components of value. Uniqueness. That's why car runs always try to do limited editions with special tweaks. And often they're very similar to other things and they just leverage up a little bit more personalized attention to try and get in a premium. Scarcity gets premium. Gold is inherently scarce. In fact, the amount that the average person holds is at its all-time low. In actual fact, and you can see it in portfolios, you can see it everywhere. The amazing analogy that I love to give is that I'm essentially an online dealer for home insurance, and your house is already on fire, but amazingly enough, I don't ask you the question, is your house burned down or still burning down? I continue to take policies for fire insurance. Would you insure your home that's already caught alight? It's nanothermite, it's going down, there's explosives as well. Let's make this a great story. You're going to lose your home. 5%? Are you going to you're going to insure it for 5%, 20%, 100%, or maybe 200% and get a better home? I'm the guy who's saying, hey, no worries, we take fire insurance, no regards, we don't need an inspection. Just self-cert that, yep, that's your home and we'll cover it. You can still buy fire insurance, and I'm telling you the system's burning. I'm telling you the controlled demolition is here, and you can still buy at a discount window, no less, as much as you want. You can insure, and you can have one home and insure 5. What are you going to do? So that's where we are with the gold market right now. I can't make a stronger case. It's a flaw of the system. Suppression, manipulation, discount window for China for not dumping its trillions, etc., etc. Call it whatever you want. The gold is moving generally from west to east. Yes, some gold did come in to America. That's probably from Toxic Bank UK and some maybe European candidates that are trying to support them. But let me say, long run, the gold has only been moving to the east, and that is the fire insurance for the collapse. Who comes out better? The person who's insured against the collapse. Who is that? Well, everybody, there's a lot of American nationalism right now. I love Americans. I love going to America. I hate the people that have run your country and destroyed it for you, and bringing on hardship for everyone else. So let's be clear, it's not an anti-American thing. But if you compare who comes out of this better between America and China, despite China's debt, China is a producer. It makes things, and it lives within its means. And actually the difference, the surplus that it generates, it's putting into gold. This is simple math. America is on a credit card. It consumes more than it exports and makes. It's spending on debt and creating debt instruments that nobody want to own or hold, that are currently collapsing in value right now. Who comes out better? Answer that question honestly, regardless of some people saying, well, China's got debt as a percentage of its GDP. Its debt is relatively low. Of course, it's got a ruined housing market. They're going to muddle on. It's a command economy. They'll muddle on and see it off, and they'll shake it off with production, etc., etc. Have they got the perfect demographics? No. But who is the original demographics boomer generation? It's America. It's America. Is Europe as bad, if not worse? Yes. Is Korea got a lower birth rate? Yes. But none of them have all the attributes, and none of them are the hegemon. And when you're big and you fall harder, and it's more destructive. So that's what the American maximalists need to know. There's a lot of economic commentators that are in that category. Stop saying China wrecked. It's US wrecked.
Yes,
And it's
I
going to
agree.
have a chronic effect on worry about your own game, first of all, and it's going to have a chronic effect on your living standards. And Trump isn't fixing that. He's overspending again, and overspending is what got you there. Every government expenditure that is beyond income is inflationary, and inflation is a tax on you, and it is a reduction in your living standard, and they lie about the most important stats. They have to, so that you can't see how much they're stealing from you. That's the rules of the game, just spelled out, real simple.
No, I totally agree with you. China does have more leverage. And if I don't want to go down the rabbit hole this early, but if you read the book by Klaus Schwab, The Great Narrative, The Fourth Industrial Revolution, in both of those books, he does mention about giving control of the new monetary system to China. So essentially, with China and all their debt, yeah, it's like taking a bullet in the foot. But America, it would be like putting a bullet to the head. So they would survive.
Yeah, and if you want a global communism, of course, you're going to make a communist nation the winner with social scoring already in and everything else, and all your fantasies, if we're going down those holes, that are going to work very well. You want them to become the leading light, and you see the capitalism failed. The Chinese model won. Yay, communism. We haven't really tried that yet,
Yeah.
Oh dear, oh dear, oh dear. But the funny thing is, they have a communism command structure, but actually they have vociferously got a production and a manufacturing based model, and they didn't lose their manufacturing. They maximized it and they scaled it until most of the things people needed are being made there. So they turned through a command structure communist nation, and you didn't need that to do that, but they're going to sell you communism as success. See China. So after America's crashed, they're going to say capitalism failed. Meanwhile, it's cacocracy failed.
That's correct.
Corrupted, fraud, fiat proliferation, central bank over expenditure along with government over expenditure killed the currency, unsound money, undermine the culture, the whole destroy a good society. And then they're going to say, see, this one with the social scoring and the people that sleep on benches because they said something bad about government once and can't get a home and don't get any welfare or anything like that. This is the model. And of course, if you want to take full control and have totalitarianism, you want that one to win. So we've kind of had a thesis, a synthesis to it, capitalism and communism. And actually they made the communists highly capitalistic in manufacturing, and they made the capitalists all woke and full of these inversion, perversion, so that they've merged features of the two and they get the synthesis they want. A functioning economic environment of actual corporate kibbutz communism, Bolshevik communism for the citizen, combined with government corporate fascism. That means corporations working hand in hand with government to manage the sheep, which is us.
It's called stakeholder capitalism. I followed this stuff intensely through the COVID-19 when that began, and my YouTube channel got even shut down, the first one I had, because I was touching on these topics and the whole transhumanism agenda. So we'll save that for later on down the road. But real quick, just to end our conversation on the bond market, I did want to share this with our audience. You know, our audience is mostly crypto investors, XRP specifically, and of course, we'll talk about some other things. But what I find very interesting of the overall topic around the bond market and what's happening in Japan is how this does tie into what happens in Japan, because in 2019, it was the CEO of SBI who said publicly that every bank in Japan would eventually use XRP. And for those who don't know, XRP is a cross-border remittance protocol. It gives institutions access to free capital and have new access to liquidity. So if Japan is slowly stepping away from US debt or the dollar weakening, personally, I can't help but think XRP could essentially be part of a larger strategic shift to lead us into that tokenized digital system. So I just wanted to share that with the audience. You don't have any thoughts on that, do you?
No,
briefly.
Firstly, you're well ahead of everyone on keeping up abreast with that. Technically, XRP, nothing has changed on our forecasts that we've made that are exceedingly bullish. Of course, you're in a pause period right now and might be worth just going over some of those crypto charts for people. I see certain status cryptos doing exceedingly well. And interestingly, I'm going to throw one in for you to keep a watch on for me, that I'm going to highlight is equally going to do, along with XRP, apart from XLM, which is a later version, very similar basis. But I'd like to show you that and have you run points for me on any news that drops. And some people are going to be, what? I can't believe he's mentioning that crypto, because it had a pretty scammy Elon Musky type, but younger generation Chinese guy. And some of you will start guessing what I'm going to show you, who was always bouncing around like he had 10 espressos and a line of cocaine. And
I'll do my research on it for sure, and I'll be happy to share.
I'm referring to Justin Sun, who's now no longer directly, it seems, involved with Tron in quite the same way as it once was. But I've done a chart. Here's the actual chart, first of all. And along with XRP, which we are exceedingly bullish. So let's just deal with XRP and we'll come back to our friend. This is the technicals that are unchanged. That's a 19.35. And that was an unbelievable and amazing break. And we took that. We will point out, by the way, Versan, for those that aren't watching our Crypto Sniper channel, that we did also call the top at 3.4 right there. 3.36 was our target on this structure. And we said that's likely to be a localized high for a while. This was quite a flat-based one, and it gave a target right in there. The YouTube's still up, 3.36. We called a localized high for XRP there. And since then, we've been in this holding structure. That's a falling wedge. So eventually, I think that resolves to the upside. But you can see the role the 2 has played as well, the $2 mark. But I will point out, $2 is some way off. I don't always suggest in really macro setups, but that was quite a big setup. Let me go up to the daily time frame. I don't suggest that people jump in, jump out, but I wasn't prepared to sit it out on the macro setup. That's still going to do a 19. I said, I'll get back in. But we saw this, and I didn't like what was followed this. So I took my profits and ran after getting some out at 3.36 and others later down. I didn't like the structure for a while. There was some threat at some point that it could have had a bigger reversal, and this $2 line has been very significant. However, more recently, even though we're trading down today, Bitcoin got a bit of a smash down today, still that correlation with Bitcoin, it's not independently strong, which will bring us to Bitcoin dominance in a second, which I know you want to hear about as well. But I mean, if it could test a little bit down, generally falling wedges pop to the upside. But this has been quite an extended period in this range. The bulk of it has actually been on the lower half. In other words, this ground floor of this two-story property. So I'm happy with the fact that we got out at 3.36 and we're prepared to get back in and look to be invited back in. The $2 largely held. So that doesn't mean it wasn't tested. A wick test there, wick test there, wick test there. We had a proper spill through, which could have been a head and shoulder, but a return back above. So there is a big buyer, and that tells me long run that story comes. But if you're not in a hurry and you want to accumulate back in, something just above $2 might still see you get one or two lucky fills, because there have been some tests and you have traded sub 2, but not for very long. So 2 is a very good structural support point. So if that falling wedge doesn't pop to the upside, that could happen. In due course, we still see the much bigger target. Remember, big patterns, long time frames. So again, to show this fullness of XRP, and I know you're a bull with us on this one, we are very bullish it, but this is a pause period and this is a bit of chop and churn. You know, who knows what might come. If we were to get a grand collapse, I'm still undecided, and I'd like to be undecided. People that decide too soon commit themselves. You know, if we get a real demand destroying event, I don't know, Russia starts dropping bombs on Berlin, missiles are going, Israel, Iran. I don't know if wars are the thing anymore. We know they're going to steal and they're inflationary. But, I mean, who knows what could happen? You could get a flag here. It doesn't have to be a crisis. Or it could even be a falling wedge. I'll make it squeeze a little bit. And we get a bit of scare. We get a bit of scare. And we go once, twice. There are a couple of scenarios where this could dip low. That could see the 2 that's been tested a number of times fail. And that could be on major debt-based collapse. And debt-based collapse, the one thing no one's talking about, except if it's a Japanese bank, is banks. As I mentioned, Bank of America bought 500 billion at 1% of bonds. What do you think that's worth at 5%? Well, I can go get the same yield for 1/5 of the price. So the value is obviously chronically down. No one is talking about Western banks. The media isn't wanting it to happen. Everyone's talking about long end of debt going through the moon. Hold on, who holds a lot of long end debt?
Yeah.
Who's sitting on a portfolio of mortgages?
Right. You have to ask the question, though, like the fact that they're buying all of this debt. And again, this is something that where I specifically focus on tokenizing that on RLUSD, the stable coin denominated in dollars, contributes value to the XRP ledger, which is very interesting. That might be a solution that they're navigating right now. But overall, just to add some flavor again to what you said on the XRP, and for our listeners here, what people in the community don't really, they fail to see the bigger picture when it comes to some of these digital assets. They're not getting the full story, really. They're caught up in the cycle of hype, FUD, and speculation, which is, I think, fueled by influencers. But as traditional liquidity sources begin to dry up, and that's the trajectory we're seeing right now, the demand for XRP, like you said, in a crisis, will actually increase it significantly. It becomes about supply and demand, because fiat currencies, what can they do? They're printed indefinitely. But XRP has a very finite supply, and it's deflationary in nature. So through burning it, makes it an ideal asset for liquidity provision. So the price of XRP, therefore, is not merely a reflection of the speculative interest, in my opinion, but it's a direct response to the market's need for liquidity when traditional financial systems begin to fail. That's where I see it going.
Going back to my convexity chart, as fiat and debt starts to go down the really steep part where they're both losing value at a rapid rate, again, the bankruptcy slowly at first and then suddenly very quickly. When we get to that stage, and we are not that far away, it's already happening a lot faster. Actually, all other things being considered, I always used to talk about, the traditional finance is a Jupiter and crypto is a beach ball in the corner of the room. That was when the total market cap was around 2 trillion. Now, Bitcoin's already at a 2.2. It's on its own. We're probably at about 4 now, but it's got to get a lot bigger. There's probably 350 to 400 trillion in debt alone out there, not including derivatives. So you've got a lot of growth that beach ball still has to do. And the collapse of the one system, remember, the wealth of the legacy families, many of it in shares priced in fiat, many of it in holdings of land, ground, gold, many things. They need a benchmark of mechanism, and they want their wealth to be transferred. They're not going to allow it to be crushed without seeing it being reinflated in the new system. That's to correct. Some degree. So sometimes people say it's all doomer when they hear me speak. Well, no, for the reinflation of the new system, that's your opportunity. And gold's role in that, but also crypto as a big player. And I see XRP is certainly going to play a role. But right now, is it about to melt up to 19? I would say no, not on the day-to-day basis in the next day or even the next week. It could actually get cheaper first before it does. But if you're holding and you're an investor for the long view, do that. I tend to have a certain time frame. I don't like to wash out too much of profits. I find it psychologically bad. So I feel happy with the 3.36 and the 2.5s I got when I saw it continue to go down. And that was our last upside HVF, a marginally higher high. That's it. So technically, that's already marginally higher high. After a major big surge, it points to a little bit of a rounding out and a bit of a topping. But longer term, you're going to be golden. I want to show you this one that I'm going to dragging you back because you're going to deep dive for me. I have a feeling that Tron, TRX, is going to be part and parcel of inflating or the carriageway of getting treasuries or expanding the new environment. This is the only pattern that possibly surpasses XRP's pattern for us. We see it as a major, major potential upside. This is a big time frame on the same time frame. What I did is I've divided it by the CPI, something I didn't do to XRP. And I've done it a few times to really, it's got an upward gradient. You can see it's bending up. Let me just remove this bottom part of the page. Sorry for that. it's got an inherent bleed up, which is it's got a negative inflation rate, I believe. So they're burning more tokens than they are creating. But what I did is I divided it down and I got a representation of it with CPI. Let me just find that. There we go. That's the same chart divided by CPI a lot of times. And it's a very beautiful structure. And the key thing is, as we will often tell all our guys, HVF method, there's 3 events. And I've marked the lows, the localized lows. And I think we're in a super low vol period right here. And this, to me, is going to be a major outperformer as well. And
Yeah.
I think I see it. It's a smaller market cap. It's not as liquid. Please be aware if you think you're dumping in big amounts.
Built on the Ethereum network. I just want to clarify that. So it's an ERC20 token.
Is it?
Yeah.
TRX. It has its
TRX,
own chain.
Tron, right?
No, I think you might have. I might stand corrected, but I think you're incorrect there. They've got their own chain. You transfer on Tron chain.
Tron chain. Okay.
Yeah. Check it out. But anyway, you'll clarify that. We'll do a big Google. But
You're right. Yes. It did migrate to its own independent blockchain, the Tron mainnet. My apologies.
That's it.
Yes.
Yeah. No, that's fine. That's all good. I just don't want us to make. We can fix it in the mix, but I don't want the guys to get the wrong impression. I find it the cheapest at the moment, but XRP is very, very competitive and cheap. But a lot of when you're moving USDT, Tron is an option that's around there. It's very, very cheap. And I have a feeling it's going to be the big on-ramp. It's going to be the bridge of getting a lot of things in. Technically, it's looking unbelievable. And like I say, the profile of the guy is, I battle to take him seriously, but he's probably born into legacy wealth, China wealth families. He's a front man. And, he was very unpopular. He was worried about getting arrested if he went to the States. Now that Trump's in charge, he's going to his dinner and they're best of mates.
You know what that means, right?
Yes, especially when you look at Trump token and who pumps Trump token and then who dumps it and gets the money. The cacocracy, by the way, the insider trading, the cacocracy, these Melania and Trump tokens that are created for people to milk out of. I mean, the corruption that is going on. And it is such a cost to you, the individual. You think it's harmless. They made some money. They got a little earner. No, it isn't. It's absolute corruption to you. He's signing deals. He's doing things and getting paid for them. His salary is not even a feature. What he earns as president in this corruption is vast. What his family, and he probably bungs people for it all the way. But just any notion that there's justice and proprietary behavior in the political circle. I saw Elon say he's stopping donating to politics. He's almost looked a bit butthurt and all of that. I think he found how much these guys are self-paying themselves. There's a reason why they're all millionaires. The reason why they're such brilliant traders. There's a reason.
They're cheaters. Fraud. They're cheating from the inside. And now with Trump, even and his sons, they have this little crypto group. I don't know if you're aware of this.
Liberty
they have like a huge fee. If you pay it, you're inside the club and they can give you the inside information. Not to mention, Trump rug pulled his own voters the day he got in office with Trump coin. Like, isn't that, and these are the same people, cheering for him for doing the right thing. So anyways, that's just a double-edged sword. Please carry on. I'm sorry.
I just thought it's a social comment for our times. And, it's the decline of Rome. It's when nobody cares anymore about even impressions. They're not even pretending to hide. It's absolute fraud. They were, it was the vomitariums and orgies with your slaves and all of this stuff. Some of that they blamed on lead poisoning because of the new pipes, but that they had plumbing and all of that. But let me tell you, it was the decline of the Roman Empire, the coin clipping. There's interesting stories behind that as well. But it's the undermining of money and the absolute inversion, perversion of the ruling classes. And we are there right now in terms of that. Did you want to see a little more on metals, Versan?
Yeah, I know we're getting close to the end. It's already 53 minutes. I mean, I could talk to you all day, but maybe I'll just ask you a quick question and then we'll move on to metals. I'll keep it short. Overall, what we're seeing here, I think the cycle is just layered. Macro signals are saying that liquidity is tightening, but structurally, and this is something we all can confirm, they're going to have to inject more money into the system. So would you say, some people are saying the bull run is over? Obviously, I don't think so. Others are saying it's just beginning. So what's your read overall on all of this?
Yes, I'm going to say something interesting. I'll start, funnily enough, we've got the gold-silver ratio up first. I'll do it backwards, shall I? This is eerily low vol, in and around the 100. The blue line is the 100 gold-silver ratio.
Okay.
And we have been pivoting. We warned, we didn't say it has to happen, but we say if you had a really big crisis, that was a little bit of a sell-off, like a risk off, and most of the risks are to the downside, and you've got a little bit of a sell in gold, you could be in a situation where you get a bigger sell in silver, and that actually you could face a higher high. So after this high over here, we said, be careful, you might get a higher high. There was a pattern there, and we got a higher high. It wasn't significantly higher. It was about 107. And then you sold off pretty hard, brutally. There is a setup of very low volatility coming here. And one of two things happen. We break down out of it, so we get violently moving to the downside. That is an accelerant for silver and gold, but particularly silver. Or we have maybe some bad news where they both could sell off a little bit, but the silver more, or gold holds up okay and silver gets slammed. That could be a move to the upside. But you are cuddling this blue line right here. And I've even done the volume by price to show that most of it is batting along, I don't want to say the floor, but most of it in and around the 100. So I would imagine that there's people that when we're going to 107 aren't buying gold and are buying silver. And when we go to 98.5, buying gold, not silver for now, because it is also being supported. When you're at the 98.5, it's not yet thrown it down. There's money coming in for gold more than silver. So it's an interesting juxtaposition. There's a major move coming. We're not overhanging our hat on which direction it is, but if we had something that was really disinflationary and negative that saw both go down, I would expect that this goes higher. If we saw more devaluation of money, but silver starting to get that bid, and maybe some facts about supply and above ground, the news, how it got formed, we could actually see it break down. And then I would revert from buying 75% gold, 25% silver to going 100% silver. If we get a meaningful rejection, it's quite a low time frame. It's a 4 hour, but it's just something to keep a watch on. Mm-hmm. But the key thing, if I go back up to the higher time frames of a week, you have been higher before, and that crisis can be surpassed by nature of crisis.
Yeah.
And the banks will still be, central bankers and the super rich will still be buying gold because they know it's going to turn into a mess with...
I agree. This is like risk on, risk off kind of thing here. Yes. Offensive and defensive play at the same time. But overall, to your point, we're still telling people, our clients, to rotate out into cash and hard assets because governments are desperate indeed, even if they're playing this cycle of injecting money into the system. There's a war on cash. It's a very clear sign. I even got debanked. I don't know if you heard about that. They want transactions to be tracked, taxed, and that's about ultimate control. So owning gold and silver outside of the banking system, it's not about value. It's not about making money. It's about freedom and anonymity. It's about preserving your purchasing power that you work so hard for. It's an insurance policy.
100%. And what you say is very valid and accurate. And I will add to this, when we look at this technically, what's gone on is there was very much a flag over there, and we broke to the upside here. So we've got to be a little bit cautious about being too presumptuous and calling the reversal. I do think we could come down a little bit, but I don't know if it's the last time. You see, you came down here only to squeeze and go higher. So it depends on the nature of what crisis they are brewing for us. Because believe you me, we are going to start facing massive crises, financial and probably geopolitical masking agents. So what format they take and what the net result is, you could still go at some point, maybe even after a dip, you could still go higher on the basis that gold will continue to be the reserve asset of the kings. So the big money will chase into gold, while silver, if there's no industrial activity, no one's buying any solar panels, and we're just killing everything, think like the COVID events, shutdown, lockdown, we have any such form, you can get that blow off move. So I don't want to be the first to call the top this time on the gold silver ratio. And when we saw this structure and the failure to break down here, we actually saw this as something going out the top. So right now, gold has actually dominated, but right now we're squeezing. I think it could go down and later up, but it could also go up and maybe later down. So watching that, keep stacking gold as part of this, but also add a tiny bit of silver because of unobtainium. So that's why I kind of say 75-25. When we break the 75 on the way down, and possibly before, if we have a good reversal pattern, that's going to be 100% silver. Then I don't even stack gold anymore. I will already have what I have, and I'll just look to add to the silver number. So somewhere in between this point and this point, I will go 100% XAG until such time as you can't anymore. And coins are good because they're numismatic. So bars, you might face capital gains. So just bear in mind on that. So that's the gold-silver ratio. We have also said that platinum is due a run. But many of the countries that are watching in your part of the world could face a VAT. So don't buy if you have a VAT. Buy in the States, buy where you're not paying a VAT. But it is thinly traded and it's a slightly harder sell. Personally, I always buy it off you myself, but it still needs to be checked. So, it's great when you get the guns that do and tell you the digit. Check your metals. Silver generally isn't fake, although there have been some examples. Gold, and you need to make sure of. Buy from reputable bullion dealers. Mm-hmm. And this is how platinum's underperformed. I just thought I'd show you this because this is kind of your precious metals chart. This is all the last 20 years. So it starts 2005 over here. And you're looking at platinum 19.5 off the 2021 high and 52.9% off its all-time high. So very undervalued. It would need to double and it still wouldn't be through its all-time high. Palladium started to eat its dinner a little bit here. It went parabolic for palladium here. You can see the gray line all the way up. So that's when the green agenda was having everything be no more diesel. And platinum was being used for diesel. We weren't doing diesel engines and a lot of battery. Palladium got substituted. But then palladium got super expensive up into this 21 high. Since then, rhodium and palladium that both had runs have been correcting violently. So rhodium is down 80% on its April high. It's not something you could invest in, so I won't waste time on that.
It's just crazy. It's just crazy how manipulated the market is.
Super thin. Yeah.
It's too much. Like, oh my God.
Yeah. The ones that have been behaving like the money substitutes, you had a hard bottom here for gold again after going sideways and down from the 2011 highs. So gold started to reverse here, had its 3-year sideways, and then really started to move here. So we're in the gold accelerates on debt devaluation phase right here. Silver part participated in that, but not to the same degree. Yet that changes at some point in the future. We just don't know. And I don't want to be too early because this is a bigger crisis than people realize.
I agree with you. Well, real quick, Francis, I think a lot of people, including myself, we're always looking for opportunity here. And maybe if we look at the crypto markets, that's where the real return on investment is. The quickest way to make some cash and then invest it the right way, right? We see Bitcoin, it just hit 112,000, if I'm not mistaken. But typically and historically in the 4-year cycles, Bitcoin dominance peaks. It then flattens and eventually starts to bleed out into the altcoins. Do you think we're close to a moment like that? Because I think capital is already looking for an asymmetric upside right now, and maybe altcoins could deliver that. What do you think?
So the chart I brought up is the inverted Bitcoin dominance. It's one we've shared a lot of times on YouTube. Okay. And this is when Bitcoin is master. In this red, I put these 2 red lines there. That's where it peaked out last time. It had a close to high there, and then there was a final dip. That was at around 73.63%. I'm not expecting it to do this time. So the shocker is I'm not a maximalist, friends. because of this prediction. Why? Because I'm calling for Bitcoin eventually to be in the 20s in terms of overall size, because its actual use case as the first edition. So when is the first software ever the best? And this notion that this was faultless divine code is not correct, because there was an inflation bug found not once but twice. So, you know, it's not going to get the high utility because of costs and speed. It's going to be what it is. The best it can hope for is digital gold. It's try to be everything else. Talk about all the layers, and I'll say that's Microsoft on Lightning Network. It's all sorts of layers on top. It's a completely different game.
Yeah, it's like what Visa tried to do in the 90s.
Yeah. Yeah, exactly. So we're in the situation of we're already in our red zone for the turn here. We've already been once too early. We called over here that this was likely going to be a turn. And actually we dipped lower. And now, so we don't want to rush it. We've had a little bit of a bump, but not too much. So this has been very low volatility grind down. Remember, I've inverted the charts here. But our overall structure for this on the macro is that the alts will dominate. So you want to be in those status ones. This is the squeeze. And this generates for us. We think you go up, you come down a little bit, and then there might only be later cycle, or it will be very quick. You'll get a small dip and you'll just go. But we see this eventually getting to, remember the scale is upside down, higher is lower now by value. We see Bitcoin's relevance losing. So we see the new status token. So we think XRP, Tron, and some of the other cryptos like it, XLM will be one. Other status, you've got Quant, Algo, HBAR, ADA, I would say those are in the second tier of status that I expect could suddenly start doing very, very well as well. But XRP and Tron are very strong candidates for me. They're going to do something with this Tron. Bear in mind, it's China friendly as well, it seems, from its front man. And a lot of that money that's in treasuries or anything else that needs bringing into the cryptoverse could come in there. And that's also why I don't think it gets favorably looked at so much in America. And I think it's a mistake. Technically, it's actually got the best setup, even between XRP. I'd put XRP second. Bigger market cap, more liquidity, XRP, multiple to go, both high, but Tron actually has further to go to its target as well. So two very strong technicals. XLM is not going to be too far behind in that space, has a similar technical structure, but is lagging a little, XRP. So I prefer XRP, better liquidity on that. But that's also going to be one of the same, and I'd expect to do very well. So there are going to be real haymakers. Just on your point, though, for the guys that say, oh, I want to make real money, I need to be in the hot stuff. I actually advise the opposite. I say have some boring gold and silver as 75. If you're young, you can maybe make that 50%. But most people, for me, I would say 75 to 80% have the metals and play 20% for the cryptos, because I don't know where Bitcoin will be. Bitcoin could be 0 or it could be 1 million. And it's still only be 20% of the dominance, which would mean Tron and XRP have gone up
other opportunities,
40 times. Yeah. But you don't want to have it all in the most volatile thing. The key thing is your ability to cope with volatility. You're going to go from poor man to rich man to choosing your Ferrari to choosing your house to utterly morbidly obese. Not obese, miserable man to suddenly back and happy man, and all of this. You can't invest in a manner that your own maturity or ability to cope with volatility will destroy. And the minute you get emotional, you will reap havoc on your portfolio. So you almost have to think as the new 60-40 portfolio is the 80-20, the Pareto principle, metals 80, and have all the excitement you want in XRP, Tron in the 20%. And some people go, oh, but I'd be a lot richer if I was 100% XRP. Most people can't hold.
I agree. This has happened to some of our this has happened to some of our listeners. They stayed in one asset And when inflation didn't stop, they missed cycles, they missed opportunities, and they were forced to sell their assets, holding them for 3 or 4 years just to pay
Yeah,
for the higher price of goods and services. So I totally
that's
agree
right.
with you.
And,
Yeah.
and imagine while gold's running, you were only
Right.
100% silver, or worse, platinum.
Yeah.
So have a little bit, have that 80, make it be 60 gold, maybe 20 or 55, 50, 30, whatever, gold, silver, and then have the 20% your hot pots, because the stability, even if gold is grinding its way up, that it brings to your emotionality. If your portfolio is too volatile, that the volatility is being transferred to you, it's the beginning of its destruction. Because what ends up happening is you have one bad day with 3 espressos in the morning because you're dopamine infested, and you just think, stuff it, I'm going to panic and sell, and I'll just sell everything, and then it really pumps after that. And then you put leverage on to buy it all back for the bit you missed, and you destroy your portfolio and you sit with a zero. And
Yeah.
actually you were in all the things that went up. And by the way, it takes, in case you think that's unreliable, not that long ago, I mean, a couple of decades ago, but I was still an old enough gray hair, or bald hair, I should say, to know better. I actually traded the British pound once from about 160 and it went up to about 175 to the dollar. And I wanted to set up and I wanted to put it on, and I missed it. And then I came back and it was already running. And then I was angry because I was out and I hadn't put the pending orders in. So then I charged in to make up larger. And then I went in too big. And then it had a pullback. And then it was hurting too much. So then I got out. And then it started continuing doing it. I actually perfectly synchronized my emotional responses to actually lose money with the right view in a market that went up, only going long.
Wow.
That's
I
how
mean,
much
yeah,
damaging
it's
when
very
you lose
psychological.
control and you get angry. When you
Yeah.
lose control, it takes a special kind of incompetence. And I was already 10 years into trading, but I was so watching that and I so wanted to be in it. And I was already counting those profits. And then I didn't put the order in, and then I got taken away. All kinds, it's all excuses. It doesn't matter. You can emotionally destroy your wealth building, being in all the best assets for reset. Do not do it. You need more stability. What you want is enough volatility to make money, not too much.
I
If
agree
you
with
make
you.
too much money too soon, you can't advance in growth faster than you yourself is growing,
Well, just
because
don't be
you'll
greedy
just
as well.
self-destruct if the numbers get too huge. And that's what happens. And then the dopamine fix, the minute you start watching your screen and becomes more important than communicating to family members or anything else, you're waking up, checking the screen, you're getting sucked into the vortex, and you're going to make some emotional responses that will be bad decisions. And the same with leverage. So a big warning out there, and I would say precious metals will bring you some security. And if they do a digital down, an internet down thing, even though you're a crypto guy, you'll be so glad to have a couple of silver ounces and a couple of gold ounces on hand. That will be currency of the moment.
Well, I know we're way past our time frame, but I do want to ask you something before your final thoughts. And I don't mean to put you on the spot here and go deeper, but you seem to have a way through looking at a narrative and seeing it through better than most, in my opinion. We talked very briefly about this even before, and some of the other rabbit hole topics, but for some of our audience, they want clarity on this stuff. We see Project Stargate, the Epstein disclosures. I'm sorry to jump on it like that. And some people keep calling this the Great Awakening. And personally, I think it's a load of shit. Um, do you think we're seeing real exposure here of the deep state and they're being neutered? Or do you think this is more controlled truth, the illusion that is being put out in such a theatrical way where the distraction is so chaotic that people don't realize we're using this as a controlled demolition to justify more war and more control?
I fear, unfortunately, like you, that we're being given some truth. So the arc of truth is long and wide, but we generally get to understand how political systems work, and they are inherently blackmail run. secret service, dark state, frontman figure-based policy and system. The Punch and Judy show. So the real decisions are not being made by the elected people. I consider participating in elections much like taking the CV19 miracle cure, a mass psychosis exercise. They need you to believe that. And I actually think that if we all could not vote and there could be a massive disenfranchisement of people voting, they wouldn't be allowed to continue with their agenda. I think there's rules. There's sort of codes. Their key thing is they've got to keep you engaged in voting. And they did that brilliantly. You know, they put a demented old fool that was quite clearly a pervert against a louche loudmouth who said he was going to do this, that, and the other. And everybody was so sick of the inversion, perversion. They got you so sick to your core with the wokeism that everybody ran out and voted the other way. And right. You're being kept like two ping pong bats, and you're being kept like the ball bouncing between that. And they need to keep you engaged. And the more successful they are in getting you engaged and winning votes and participating in their scam democracy, the more you're actually endorsing it. So despite Biden being utterly despicable, I would not have voted, and I would have encouraged people not to have voted. I think you would have got whoever they wanted you to get anyway, and I think he was chosen for this role. So you have the sort of three all-controlled drama triangle. At the bottom is the Nazi, which is anybody who questions government, wants liberty, or is self-reliant. They paid and controlled the Nazis. You have the Zionists. Trump falls into the Zionist group that feigns conservative values but basically stands with Israel. By the way, he's not allowing any foreign students that have ever criticized Israel in a social media post. So he's actually filtering out people that have criticized another country but not his own.
Yeah,
just let that sink in for a little bit. That's Zionism described in one tweet. And then you have Marxism, which is actually the worst, but they position it as the high-thinking, smart, academic people that think, we really should allow people to do this, that come up with all wonky policies, which has a lot of the inversion, perversion. So it's Berlin pre the war. It's very perverted. And that's where you get to see the leak outs. But supposedly all the clever people that sit in the universities and make cases for government should be doing this, government's in higher involvement in everything. Supposedly, the Zionist part of the triangle is supposed to be small government, but actually, as you can see from the big, beautiful spend bill, they're actually for big spending and big government just on different things. Mm-hmm. So the one spends for the military and the other one spends for the welfare, both of which turn out to be ruses that destroy the sound money nation state. So America is going to get destroyed by a sound money nation state, and anybody who criticizes either the Zionist or the Marxist part that they fund is that what I call the puke bucket at the bottom gets called the Nazi. But if you look into the funding of the Nazis, it was the Warburg Bank. It was all the usual suspects. So they actually control all three, but one's the naughty corner, one's you're that variety, the right, but you're pro-Israel, and the other one is the Marxist that is all about global communism and bringing in inversion, perversion. And they play them all off against each other, and they'll categorize you, and it's like a template. It's management of template. So you are one of those by definition if you express a view. And if you're in the puke bucket and they just say Nazi, they've won the argument by direction. So by wanting maybe a homogeneous state, straight away, just because you want to feel more secure around people who share your culture, means you inherently one thing. And that is a resistance to their overarching scrambled egg society communism, which is essentially failing. So you've got this social paradigm, this little drama triangle where they bounce things off, and you get to vote to be any one of the above. And criticizing and calling conspiracies or false flags will usually end you in the bottom one. And you're usually addressing either the Zionist or the Marxist. So that's the world template. And we are going, it's a communist triangle, it's a Bolshevik triangle, it's brought by a certain group of people who are hell-bent on overseeing, being supreme, who believe they're supreme and will be the ruling classes over everyone else. And on that, by the way, we talked of technology and AI, and we never drilled much further. There was a picture of New York that had everyone on horseback and buggies, horse-drawn carriages. And 13 years later, there was just cars. And you went from 900 horses per 1,000 people. Many people didn't know. So there were a lot of horses because you had a high demand for them. The worry I have for us is as the working people with AI and robotics is you're now the horses. It smells to me like the only thing that's doing well is the glue factory that's getting all the old horses queuing up into the abattoir. That's our big problem. These people will orchestrate and right-size the global population for the lifestyle and standard that they feel they need. A robot never switches off. It always works. It's an ideal employee. AI and robotics hand in hand are going to lead to, I fear, the right-sizing of global population. And that's something we should all have a concern about. And you should resist these people. On a positive note, supposedly Florida got gold passed as legal tender. But I will also point out the great taking gentleman, Mr. Webb. He said they lost in Utah because nobody showed up and the banking lobby showed up. Guys have got to you can't sit at home and be NPCs about this. If you have David Webb, I think his first name is David, and these people working on your behalf, you have to show up and you have to tell that senator that vetoed, because they actually won and everybody was happy to do it, but the senator vetoed it, and then they could have overturned the veto, but they didn't have the will for it. You have to put pressure on that guy because he's selling you into slavery. That Utah, I don't know if it's a senator, I don't fully understand the American political system. Whoever's the state head, that's the representative of that state. I don't know if it's called a senator. He needs to feel the wrath of the Utah people for turning down gold and silver as monetary tender in his state. And 100%. That needs to get revisited. And if you have people going out there and batting for you and taking the argument and making the argument and winning people around, but then sitting alone while the lobby groups that come from out of state to kill that bill, you've got to know that's the money lenders, that's the Pharisees right there that want you stuck in the system as serfs and slaves. You've got to fight for your own system. You've got to fight for your own money, and you've got to make, not just buy gold and silver, you've got to fight for people establishing gold and silver as legal tender in your country and your states. If you don't fight now, you will forever be a slave, and you will potentially be a slave that'll be marched off to the glue factory with a braying of a clippity-clop of hooves and a bit of braying of the horse's backside in front of you. And we've got to make sure that doesn't happen, because it's pretty dark. Agree. It's pretty dark out there, and the collapse is here.
Yeah, I totally agree with you. Those are some true words of wisdom. I actually got goosebumps because what you've said is true. And that's the problem. Overall, people don't understand how the monetary system works. So when a politician goes out there and shouts tax cuts, I'm going to give you these jobs, people start cheering. But it's because they don't have a fundamental understanding of what the hell is really going on. So, to end this, I really appreciate it. Your time here. It's always a privilege talking to you. So any short last words of wisdom or just some information for our audience that they be looking for?
Our primary focus to support people is build wealth. There's going to be unbelievable opportunities. I've already shown a couple, shared an idea. I'd love you to keep me up to date on our friend Tron.
I'll be doing my research.
XRP. You're one of the point guys I watch too on crypto. Thank you for your work, by the way. Then not only build wealth, you've got to protect that. We're going to have something I never mentioned, but I've got to run, so I won't be able to dig deep in it now. Scavenge mode by governments, taxations, asset stripping, all sorts of things, unrealized capital gains, all forms, real-time taxation, all these things are going to come as part and parcel of their scavenge mode that they need to try to retain any form of services. They're going to have to exist on much less. They won't have the debt system anymore to borrow against to the degree that they want. Nobody wants that asset. That's going to come. So not only do you have to build wealth, you have to preserve that wealth, and then securing yourself freedoms, which means the ability to have a number of options cross-border. The West is going to be the hardest hit by this decline. How many options do you have of places to stay, rights of residency in countries outside of the West? Bear that in mind. If your answer is none, you need to start working. That's what we specialize, making you wealthier, keeping it, and getting you optionality. So the market sniper for the traditional markets and the crypto sniper. And there's also links to book a call if you want to get into some of the weeds of those other 3 points.
Be sure to check him out, ladies and gentlemen. He knows his shit. So like he said, be plugged into the new system or get crushed by it to a degree. But what you need to do is build parallel structures so you don't just survive the shift, you actually position yourself to thrive from it. Anyways, Francis, it's been a pleasure. Thank you kindly. And I thank our audience. Please check out the links in the description below. We'll see you next time.